Welcome to the Melbourne Property Podcast, hosted by Sky and Lindsay Hammer from Convergence Buyers Agents, your local property experts.
This podcast is your go-to source for insights, trends and tips on navigating the ever-changing Melbourne property market.
Whether you're buying an investment property or your dream home, stay tuned for the next 30 minutes as we give you exclusive insights that will shape your next property purchase. Let's dive in. Hi, I'm Sky and welcome to another episode of the Melbourne Property Podcast. Today we've got a really interesting episode. So we're going to go over our top 10 suburbs for Melbourne. So there's two parts to this. The first is the top 10 suburbs we identified in a free report we put out to all our listeners earlier in the year. We're going to go back and see how that played out. And the second one is going to compare that to the top 10 suburbs for median house price growth in Melbourne over that same time. But before we get into it, Lindsay, my co-host, good to see you as always. How are you?
I'm really well, thanks, Sky. I'm excited for this episode because, as many of us know, Melbourne has had a really great year. It's been a great place to invest. We're sort of at the start of that growth cycle. So really excited to see which suburbs came out on top.
Exactly. And I think before we get into it, as I said, our listeners, if you've been listening for the last year or so, you know we do have that icebreaker question. But we're actually going to mix it up. For 2026, we are going to change it. And this year it's going to be, what was your win for this week? So maybe you go first. Lindsay, what was your win for the week?
I feel like you're really putting me on the spot there. Win for this week. Successful deal, just pretty bread and butter. Got a deal over the line. We're coming up to Christmas, so we're recording this in the sort of last week before Christmas at the moment. Obviously a busy time of year for many in the industry, sort of trying to get those deals done before everyone goes away on their summer leave. Mm-hmm. What about you, Sky? What was your win for the week?
Same. So it was the end of last week. We had a property, 3-bed, 2-bath in Frankston that we picked up for $780. Actually, we were already happy with that purchase price, a good sized block. But we got the building and pest done and come back and there was termites damage all through the garage. So it wasn't through the house, and we got a second opinion, and it wasn't actually through the house, but we're actually able to knock off $80,000 on that purchase price. So in the end, 3 and 2, $700K in Frankston. I don't know. I don't think I've seen anyone do one of those this year. So again, really good outcome for the client there. So it was a good way to finish up the year. And obviously looking forward to seeing what happens in 2026.
Yeah, and I think on that particular deal as well, it's a good point to raise that the client was a tradesman himself, so quite handy and can do a lot of those works. So a win for the client.
Yeah, definitely. And in the end, it'll just be a demolition of the garage where they were, and again, maybe rebuilding a new one. But again, overall, a pretty good result. So I can't complain. I think we've still got a couple more in the pipeline before the end of the year, but we'll wait and see. Some people start to get a bit slower with, I guess, accepting offers and pushing stuff over into the new year. So we'll wait and see. So people will be hearing more and more about us come 2026 if we're talking about some wins of the week. So it's not always going to be business related, but again, I think it's a nice little change instead of you harassing me for what I'm loving about Melbourne and feeling like I'm caught on the spot. And the other thing is obviously we're going to weekly episodes this year. So weekly episodes, there's more to talk about. I'm really looking forward to it.
Yeah, great win. Thanks for sharing, Sky.
Yeah, so what we're going to do is going to break down the 10 suburbs from our report for the top 10 suburbs to invest in Melbourne. It was a free report we put out at the start of the year. Obviously, we weren't buying in all those suburbs, but what we did was we worked through a methodology for, I guess, your everyday investor and what they would be looking at. So we kind of narrowed that down to around 10 suburbs from about 426. So for those that are in the report, and a lot of listeners have downloaded this report, we'll run through them quickly, but we had Seaford, Skye, Carrum Downs, Crib Point, Derrimut, Melton West, Cranbourne North, Pakenham, Boronia, Tullamarine and West Meadows. So they were the 10. And I think if you look at the growth statistics now, it's anything from 4.2, which is West Meadows, right up to 14.7 in both Carrum Downs and Seaford. So obviously quite a range there. All of those suburbs, again, I guess above what Melbourne had. So they're all above the median price movement in Melbourne over that same time frame, which is great. So we're obviously outperforming that. And again, we'll break this down, but where we've actually been buying is, I guess, another step ahead because we didn't actually buy in a lot of these suburbs. This was just kind of a test case in terms of where we were buying. So, for example, Crib Point, we weren't buying in. Melton West, we've never bought a property in Melton and don't plan on doing that anytime soon. And I'll come back to Melton and the surrounds shortly. Cranbourne North up around 7%. We have been buying in and around Cranbourne more recently, and I actually expect that to move up the list next year. So that's a little insight into what's coming. And a couple of other ones out west, Tullamarine and West Meadows, who also weren't doing too much buying at that way. But anyway, that was the list. But so I guess for the listeners who haven't read the report or maybe need a little refresh, we'll work through the methodology. And as I said, this wasn't just for us. Like this wasn't like we didn't take these 10 suburbs and then go buy them all for clients, because that's not at all what we did, and we can break down our ones a bit later. But what we are going to break down is the methodology, and because it's very simple. There's a bit involved, but I think the first comment to make is that every client's different. So when we're buying, we wouldn't just take these metrics we're going to go through in a second, But we wouldn't just say, okay, now here's your perfect one, because it really depends on what their requirements are on yield, capital growth potential, when they're looking to extract equity, do they want a renovation? All these suburb factors change. So I wouldn't just take this 10 list, but I think it gives listeners, or it did at the start of this year, last year, I guess some suburbs to look at. Maybe they weren't on their radar. They could have checked them out a little bit.
I think the methodology is going to be really important because there's obviously going to be a few suburbs that we have been buying in, we've been very bullish on, we've been talking about a lot that aren't on that list. So, for example, Frankston North. And when we go through the methodology in a second, you'll see why suburbs like Frankston North aren't making this list, most likely due to the rent-to-owner ratio. So Frankston North, we know that it's a bit higher, so around 45%, I think it is, renter-to-owner ratio. But that's the benefit of having individuals like ourselves on the ground where we have those local insights, because we knew from what we were seeing at inspections, from open homes, that it was really that owner-occupier driven demand that was happening in Frankston North. So a lot of first home buyers getting into the area because of that affordability factor. So it's really important, whilst you can look at the data and there's a methodology behind it, that's not the full picture.
Exactly. Now, when you're looking at 20, 30 data points, like you can't tick every single box. And I think it might have been the episode we covered Frankston North in detail. I said that it basically ticked every single box except for that rent-to-owner proportion. But if you're someone like could be another buyer's agent, or you could be a data-driven investor yourself, you've got to have some flexibility because Frankston North was the highest growing suburb in Melbourne over the last 12 months. We bought a lot of property there, still buying property there, but it's just one of those things that if you just went through a very kind of checkpoint kind of list, you would have missed it and you would have moved on from it. And a lot of people have done that. And I get a lot of commentary on Facebook. No, actually not Facebook. We don't do anything on there. Instagram and TikTok. And so we do get a lot of feedback saying, oh, so you're going to have really bad tenants, or, oh, the renters there's too many renters in the suburb, that type of stuff. Great, but it also grew 21%. And there were multiple clients we bought in those locations in Frankston North, and we had enough equity within 12 months to go again and buy another property in Melbourne and surround. So really interesting, and we'll get to that in a bit more detail shortly. But as we said, the methodology, so let's go through it. So we looked at the SA4 region of Melbourne. So we're looking at Greater Melbourne, come back with over 400 suburbs. So obviously there's plenty to start with, but we have to work through those. For the median house price, we went from around $450,000 to $1 million. So we're looking for that affordable price point where most investors are playing in. So that's kind of where we limited stuff there. Next one was stock on market. So again, for long-term listeners, you'll know all about stock on market, but essentially that's the percentage of properties available for sale in that suburb. And for us, we set that at 2% and below. Anything higher than that, you got lots of supply in the market and lots of stock available, which just doesn't lead to capital growth unless there's kind of some overwhelming demand factor that we're missing. Rental yield, again, we set that at 3.5 as a minimum. Again, every investor is different. For the most part, over the last 12 months, the yield we'll be buying is between 3.8 to 4.2. That's where most of the properties we've purchased have landed, some below, some above, depending on circumstances. But again, that's why we land on that 3.5, just to be safe. Inventory levels, so another one that I guess listeners will be aware of, but again, let's just say the inventory levels are 2. What that's saying is that based on the current kind of absorption in the market, it would take 2 months to all that property to be purchased that's currently listed available if no new properties were put online. So again, we want to set that under 2. Anything under 3 is actually quite like a warming market, but anything under 2 is when you're going to get that short-term uplift. Price growth. So the other thing we did here was we wanted to remove any kind of booming suburbs that had already had a lot of growth. Now for Melbourne, if I go back 12 months, this wasn't too much of an issue because there weren't many. So we basically limited it to less than 10% growth. I'm not even sure it knocked any suburbs out. I think there were 2 or 3 outliers in the $5-10 million space. It just looked more like a data thing as opposed to real growth. But now that's a different story. If we were to redo this report, we'd knock out a lot of suburbs that had at least 10% growth. So we'll come back to that a bit later. Vacancy rate, again, we have this capped at 2%. You don't want to go out and buy a property and not be able to rent it out straight away, which is why we've kind of locked in that 2% number. And the owner-occupier percentage. Now, this is the one you touched on a bit earlier. We went with at least 65% owner-occupiers, 35% renters. That was where we cut it off. So places like Frankston North missed out. Frankston proper also missed out on this list, despite us buying a lot of property there as well. It's just something to keep in mind that it's a really good example of having some flexibility in the numbers. And so if you're running a bunch of searches on platforms like DSR, HTag, Suburbs Finder, there's lots of platforms out there now, but just don't be too concrete in what you're searching, because you're going to miss some really good opportunities as well.
All right, so that's the methodology. We mentioned that there were those 10 suburbs. There's actually a bonus, an 11 suburb as well. So why don't we actually work through those, talk about where that typical house price is at now, how much growth they've had, and any other data points that you want to touch on?
Yeah, perfect. Sounds good. So let's start with Seaford. So Seaford was on the top of the list. I was actually tied with Carrum Downs. So they both grew 14.7%. So I guess say
Great.
3 times, I guess, the Melbourne average or median for that period. Stock on market for all 10 of these suburbs is less than 0.38%. There's nothing higher than that. So I'm not going to waste my time running through that number for everywhere. Just basically low supply suburbs still, which I think is going to lead to continued capital growth. But for days on market, so Seaford is now at 21 days. So again, below that 30 threshold that we like to see. Carrum Downs the same, it's at 14 days. And
So both still hot markets.
Exactly, both still hot markets, still lots of buyers. I was out at a few on the weekend, and particularly Carrum Downs, there was less than there has been over the last few months, which again is why I like to buy in December, because a lot of buyers do pack up and go away. But there are vendors that still need to sell. So, and to the fact where we're actually going to an auction on the 23rd of December. So like there's still people selling, but there are definitely less buyers around. They want to reassess and go in the next year. So they were the highest. Coming in after that, we had Derrimut at 13.9%. So that typical house price is now $823,000. Seaford was $913,000 and Carrum Downs was $837,000. So kind of on the upper end. And again, 23 days on market. So like really tight. It's exactly kind of what you expect for a market that's had that significant growth over that time frame. Sky also at 13.9%. So median house price at typical house price at $840,000. 32 days on market. I know that's less than that as well. Like we've seen what it's like on the ground. So again, there are some auctions in Sky, not many, but there are a few. But that days on market number is definitely tracking down based on what we're seeing. So I'd expect continued growth, again, because it has been at that higher price point as well.
So I think next we have Boronia at 12.2% growth. So typical house price in Boronia is now at $900,000. The days on market is at 23 days. So also, quite quick properties are going as well.
Yep. And just below that, Tullamarine. So heading out west near the airport, typical house price now up $818,000 and 11.12% growth. So again, a really strong performer. 24 days on market, continued growth still to come in this suburb. And one of the ones that we never bought in, but I think we're always tempted by. I think like it never really made that threshold. Like when you particularly as an exercise for anyone that's got some spare time over the break, if you want to actually just plot out where these suburbs are, you'll see that southeastern pocket that we just don't stop talking about, how concentrated those suburbs are here. And then the rest are kind of spread out. They're kind of ones and twos kind of everywhere. You want to be buying in those clusters because when one suburb's rising, it does generally drag up the others as well. That's, I guess, why we're focused so much in that southeastern pocket. We'll go through some of these other ones a bit quicker now there as the rates drop off. So we have Melton West at 8.4%. So just go backtrack and we're not going to move too quickly. This is why Melton West is an outlier because it should be a lot higher than this. If it was a good place to invest, would be the flip side, because what we've seen in Brisbane, in Adelaide, Townsville, Perth, basically name any place that's had a really strong growth over the last few years, it's the bottom of the market that moves first. And so you'd like look at places like Elizabeth in South Australia, kind of the lower end suburbs like Garbett, Vincent, those types of ones in Townsville, like Rasmussen, Kelso, all those ones. Wallaroo, the bottom end of the market actually rose the most in a percentage basis. It didn't happen in Melbourne. So it actually started a bit higher up. So Frankston North obviously down close to the bottom, but there's obviously all that pocket of Melton, which investors, buyers agents who have been flooding. We've had a few people that have bought there, like they maybe spoke to us and then said, "Oh no, actually I've just had a discovery call with us," and I said, "Oh, we're not buying in Melton," and they've gone and done their own thing and they've bought there. That's fine, but you can see here if like this was a good place to invest, like all these other suburbs in other cities, you would have got stronger growth, and it should be on the top of the list, if not sitting alongside Frankston North, which is obviously not the case here. So just a little side note there, but Cranbourne North, 7%, now a typical house price of $877,000, and that days on market still around 30. We've got Pakenham at 6% capital growth over that period at $741,000 now, and 28 days on market. And then we have two more, Crib Point at 4.3% growth. I'm not going to worry about the typical house price of some of these other ones. And West Meadows at 4.2%. So again, as it kind of filtered down, you can see there that some markets perform really strongly at the bottom end, I guess, of the price segment. But there were some outliers, places like Sky and Seaford, which are actually a higher price point, but actually come up at the top of that list. So again, it wasn't just driven by the bottom suburbs. It was really kind of where people want to be buying, both first-time owners and investors with maybe a bit more money.
So that is how the top 10 suburbs for investment that the report that you put out at the start of 2025, how those suburbs performed. Now that we're at the end of the year, let's have a look overall at all the Melbourne suburbs. Which suburbs had the most growth? So writ large, we've had the year now. Let's see who were the top performers.
Yep. Yeah, let's do that. So it'll be actually similar but different. So coming in at number one, I think I've already alluded to this, was Frankston North. So it had 21% capital growth over the last 12 months. Net the median now of 725,000. We've never paid more than 700 for a property. I think we're 680 maybe we paid. It's the highest in Frankston North. We didn't buy anything on market. Please correct me if I'm wrong, but we bought it completely off market. We've got a lot of clients who we bought one property in Frankston North and we're now buying a second property for in Melbourne. There's that much growth. So we're talking buying in the 600s, getting deals at 750 within literally months. So again, it's all about buying right, buying off market, pre-market, direct to vendor in some cases. I can't remember if I shared this story on podcast, but I actually bought a property through a tenant in Frankston North. So they went listen to the podcast. I think they come across on socials, but they reached out saying, hey, my landlord's given notice. I've got to vacate the property. Do you have someone that's willing to buy it? I said, let's have a look. And we did. As we actually were able to get in there, bought the property, got an introduction to the vendor, spoke to them directly, worked out a deal for our client, and we got to keep the tenant on. And the best part of this story, I'm still in contact with this tenant, we actually reduced his rent. So he was paying above market rent. It wasn't meeting minimum standards, but we were able to come in, get the property up to minimum standards, but also actually reduce his rent because what he was paying actually wasn't fair at all. So just a nice little story to go on in the year on, I guess. But Frankston North, our favourite market, 21% capital growth over the last 12 months.
Yeah, I think if you put aside the stigma of Frankston North, it's a no-brainer why this one has performed so well. So it's an established suburb. You've got large blocks there, many with subdivision potential. It's got close proximity to the beach. And it's really one of those last few sub $700,000 suburbs in a capital city that you can buy. At least it was sub 700,000 throughout the year.
It still can be. I got enough marketed there at the moment for like mid sixes. We're probably not going to buy it. But
I think that one was in a flood zone, was it?
No, that one. There's a different one.
Okay.
Yeah. And that's literally come across the desk today.
There you go.
We'll see.
But it's got that, it's driven by affordability. You've got those first home buyers and owner occupiers looking to get in the area. Like you said, similar to Rockingham in Perth and Armidale and Elizabeth in South Australia. So those sorts of suburbs. We've seen this happen time and time again. And it just happened again in Frankston North.
Exactly.
So what do you think about future prospects for those looking to get into the market in Frankston North now, though, Sky?
I still like it. So we're still buying there. We haven't bought one for the last month or two in Frankston North, I think. We missed out on one. We actually tried to get one in the last few weeks. But yeah, I think it's still growth potential. So if you look at the best way to do this, there's an agent that dominates Frankston North, Mark Burke. If you go and have a look at some of his recent sales, the highest crazy prices, like $850 for 3-bedders in Frankston North, they're first homeowners. So I feel sick sometimes inside when I see how much they're overpaying for property, but they're the ones driving the market. And that's not about to stop just because we're going to the end of the year, the new year. The people that haven't bought, they're still going to be looking next year. The 5% deposit scheme, another kind of a driver for a market like Frankston North. So for me, I see a lot of potential. You have to buy, and this is not, it sounds like we're plugging ourselves out, but you have to buy off market in Frankston North now. I would not be buying something on market unless it's circumstantial. And we had to go at one the other day because the vendor was getting nervous before auction, so we put an unconditional offer in. They didn't take it. But if you're buying at auction, I'd be very wary because we're seeing some crazy numbers for prices going up there. And you're missing out 50, 60, 70K equity on the way in if you're buying those kind of houses that have been freshened up, they've got stage furniture, when in actual fact, if you're an investor paying 800 for something like that, it's going to rent for maybe 500, yields that then start to no longer make sense. But I think from a growth perspective, still really looking good for Frankston North.
So they missed out on some of the initial growth in the last sort of 12 months or so, but there's more to come.
Yeah, yep. And again, because we're talking the bottom end of the market here, it's exactly what happened in some other cities more recently where it doesn't grow 21% one year and then go backwards 15% the next year. Some markets do that out west. But what we're more likely to see is it do another 15% or 10% or something like that. So that's still going to outperform a lot of other markets across the country, including in Melbourne over the next 12 months. But you do have to be cognizant that you have missed out on that growth already.
Very good. Let's move on to suburb number 2. No surprises here either. Frankston.
Yes. So a little bit further south, Frankston proper. So we are dropping a bit off in growth now, but at 15.1%. So median house price at $855,000. Frankston itself, again, one of our favourite suburbs. We bought a lot of blocks with subdivision potential or granny flat potential. So we've done a lot of buying there. Some of that will happen straight away. Like we've got some clients that are going through and doing that process straight away. Others, it's like that medium-term play. Buy a block. We've had it checked out for feasibility for granny flat or subdivision, and we'll do that potentially using equity in the future. So I really like Frankston. Still buying there. I think there's some really good growth still to come.
Very good. Let's move on to Seaford. So Seaford is suburb number 3, 14.7% growth, as we already touched on. Do you have anything else to add on Seaford?
No. I still really like it. Like Frankston surrounds. And again, we're like, if anyone's not familiar with where these suburbs are, and we'll just land the next one as well, which is Carrum Downs, because everyone's heard about this one as well, I guess a bit. All 4 of those suburbs basically border each other. And so it comes as no surprise to us when you look at the data, or if you look at our heat mapping tool, that it's screaming a buy, or it was screaming a buy. It's screaming maybe slightly less of a buy, but still a good buy at the moment. So the clustering is so important. And that's why we said in the last report that like all these 1s and 2 suburbs spread out across the city, whereas these 4 that actually perform the best are all kind of clustered together, which is why we look for these opportunities. Carrum Downs, Seaford, I'm going to lump them together here. They are different. Seaford obviously being beachside for the most part, but still really good opportunities. There's lots of first homeowners or even upsizers, downsizers. There's also lots of investors still active. So I'm not expecting these suburbs to definitely not go backwards, but I'm expecting continued growth again over the next 12, 18, 24 months. The only other point I wanted to make on that, so around the numbers on this, those 4 suburbs, we bought 85% of our properties in those 4 suburbs. So the 4 highest performing suburbs in Melbourne, we bought 85% of our properties there. So again, this is a plug I was as well, but like it works. Like if you're data-driven investing is kind of what that first report was, which was here's the numbers, here's a report. What actually works is here are the numbers, but also what are you doing on the ground, combining your knowledge, understanding the suburbs you're buying in. This is what it leads to. It leads to getting significantly outperforming the average. And as I said, with 85% of our purchases being in the top 4 suburbs, it works. So for us, like we know that it's going to work again next year, and we know we're going to be buying in different suburbs. Some of these ones will still be buying in. We've already started buying in other suburbs where, again, I'd be surprised if we're not at the top of that list again next year. So just wanted to kind of mention that because some people think, we could have bought any, actually we know a lot of people would have maybe got that list and started buying on the cheaper price point or some of the other suburbs if they've got a familiarity with the West. We said that a bit. If the people who are buying the West or the North, they might have landed on that. But I guess when you combine it with on-the-ground insights from what you're seeing, you can get some really, really strong results.
And I think if we went through that same exercise today and we ran through that methodology, virtually none of the same suburbs would be on there because they've already had that growth. They're beyond that. I think we limited it at 10% for that methodology. They've outperformed that. So they wouldn't come up on this list.
Yeah, that's the top 4 done. So number 5 is Campbellfield. So again, 14.5% growth, really strong. No complaints with Campbellfield whatsoever. Again, it wasn't one we were buying in, but with that kind of growth, that 3.7% yield. So again, pretty investor friendly. But yeah, it's just not one we did a lot of buying in or any buying in.
Yeah, look, I think it's interesting that it's on this list because it's largely known as being an industrial area. So there's lots of factories and warehouses and those sorts of things. And the crime score is actually really high. So the crime score for Campbellfield is 49 out of 100. And, you know, we often talk about it. There's no correlation between things like the crime score and capital growth, but definitely something to be mindful of because it is, you know, known for having those more industrial pockets and being close to the Hume Highway.
Yeah. Coming in number 6, so we've got Meadow Heights. And this was another one that we didn't do a lot of buying in, grew 14.3%. So great for everyone that did get into there. But it was one that like lots of investors and buyers agents were buying into as well. So like it was like I consider Meadow Heights, Coolaroo, Dallas, Broadmeadows as like the other like investor data-driven suburbs. A lot of people bought up north. Again, they didn't perform as well, but like at a lower price point. Like I'm not saying you have to buy in these other suburbs, but these ones are at a lower price point. So I think the people that bought in Meadow Heights, Dallas, Coolaroo, those suburbs, although they didn't grow as much, they're still going to be much better investments than say Melton West. Like I would much rather have bought into that pocket, obviously slightly higher price point than maybe further out west like that. So again, no issues with Meadow Heights. I think it'll be a continued a good investment.
All right. Suburb number 7, Sky.
Yes.
No surprise here.
So, I mentioned the first 4, we bought 85% of our property. Then we did buy another chunk of property in Sky. So that'd probably almost get us to 90. We went too far off. But yeah, one of my favourite suburbs. It's a little suburb kind of tucked in just outside of Frankston, Langwarrin, that surrounds. A really nice suburb.
Very family friendly, dominated by owner occupiers.
Exactly. Yeah. It's a bit of a newer suburb as well compared to, say, Frankston. Like, you're not getting 60, 70, 80-year-old houses. It's more that 20, 30 range, sometimes even less than that. So really good for some of our clients who wanted something that's a bit neater and tidier, that weren't kind of chasing equity or development upside. And also for SMSF, we did a few purchases as well for clients there, which I think is going to be a really good market for that.
So 13.9% growth in Sky. That's great.
Yeah. Number 8 was Derrimut. So that also appeared on that top 10 suburbs report. So this is another one that we didn't buy in. It was out west, which again, it was a kind of an outlier suburb that has performed well, but we didn't kind of really jump into it and buy into. For us, future prospects, not so sure. Again, I'm not going to pretend to be a suburb expert on Derrimut, but other than obviously the data looked very good at the start of the year. If the surrounding suburbs also look good, I think we would have been more active there. But for us, it wasn't one that we decided to go ahead with. Coming at number 9 is Coolaroo. So I know we just touched on that, but I know you got some thoughts on Coolaroo as well.
Yeah, I just want to highlight that it is a really, really small suburb. So it's only about 3 square kilometres and population of about 3,000 people. So small suburb to be hitting so hard in this top 10 suburbs for 2025. That also means that there hasn't been a lot of sales over the past 12 months. So in terms of your confidence in the data, some of the platforms we use, it looks at how many sales there have been as well to be able to give you more confidence in what the data is saying. So less sales, less confidence in that data.
Yeah, but again, I guess 13.3% capital growth. So again, another strong performer. And I mentioned to it earlier, I much prefer that pocket than out west, like Melton and surrounds. So people that are buying out that lower price point have done really well. I also like Coolaroo and that surrounding area for granny flat potential. So for our clients that are looking for potential granny flats at that lower price point, that's still a market that we do target in and around there. A few reasons for that. One, obviously affordability, but 2, high immigration and lots of multi-generational families. So let's say you go out and want to build a granny flat on a house in Brighton. Not so many people want to go there on their $2 million house, chuck a granny flat on there. You're really then reducing, I guess, the future, prospects or potential buyers, because homeowner dominated, they don't probably want a granny flat. There's obviously some exceptions. But yeah, up in that area up there, you're not knocking out a lot of the homeowner market because of the multi-generational families. A lot of them actually want that second dwelling on there. Like we've rented to a multi-generational family before, one of our investment properties. And we asked, like, is there anything we could fix up around the house? And like, can you build a granny flat? And I was like, I don't know that $200K just sitting in the back pocket. Sorry, but that's kind of the norm. So instead of knocking out 70% of the future buying market in those suburbs, and there's some other ones as well, I think there's that potential there.
All right, let's move on to the last suburb on the list. Suburb number 10 is Waterways. Now, do you know where this is, Sky?
I do. Southeastern Corridor. I didn't when you first said it. This is obviously, I went through this list earlier. But yeah, I didn't know where it was. So there you go, next to Aspendale Gardens.
Yeah, so it's 27 kilometres southeast of the CBD. Another really, really small suburb. This one is just 1.69 kilometres squared and a population of around 2,400. So a really small suburb next to Aspendale Gardens and Braeside as well.
Okay, yep. So interesting here, this price point. So median house price 1.48. That's a lot higher than most of these other ones on the list. So again, I'd want to double check some of the data, that type of stuff, just to make sure we're squared away. But it says, 13.3% capital growth. And this is from Domain, sourced to Cotality. So I believe it, but as you said, a very small suburb, probably a small number of sales, which can influence it. The other thing to flag here is the vacancy rate's 4.71%. So again, that would not have made any of our lists because we wouldn't be buying in a market with a 4.71% vacancy rate.
Where you might have trouble renting it out after you purchase. Yeah.
Exactly. Yeah.
Yep. Do you have any comments then on continuing to buy in these top 10 suburbs throughout 2026?
Yeah, so those first 4 that we mentioned that we have been buying in, Sky would be the other one that we're still buying in. The suburbs that aren't on here, actually, I don't know if I want to share them or not, but we'll talk about it because we'll probably do a report on the best suburbs for next year. And again, not to break people's hearts, but like it's not going to be here is the top 10 suburbs we're buying for our clients, but here is a generic investor brief that we see a lot. And here's 10 suburbs we would consider. Because again, that's what a lot of people are doing when they're doing their analysis. So it'd be good to see, again, how that stacks up at the end of 2026. top 10 suburbs based on a brief. Let's see where they end up at the end of the year. So, okay, I will give a few. The other ones we're buying right now that we really like, Langwarrin, we really like. Pockets of in and around Cranbourne. And the other one, which is technically not Melbourne, but you're going to hear a lot about next year from us and I think a lot of other people, is Geelong. So we are buying quite a bit of property in Geelong at the moment. We're going to do at least one, probably multiple kind of deep dive episodes.
Takeover.
Exactly.
Melbourne Property
Geelong
Podcast taken over by Geelong.
Exactly. Yeah. So that's the other thing that will be coming next year. So looking forward to that one as well.
Yeah, when you compare the data for some of the suburbs in Geelong at that more affordable price point, it's really quite similar to what we're seeing in places like Frankston North, and same sort of clustering as well. So suburbs that are bordering one another, that are having those really great data points that we can see there's potential there, and definitely sort of warm spots, if not already hot spots.
Exactly. Yeah.
Right, so that's a wrap for this week's episode on the top 10 suburbs, both the top 10 suburbs from our report we released earlier in 2025 and also the top 10 suburbs that actually performed the best throughout 2025. So just to run you through who those top performers were, we had coming in first place Frankston North, followed by Frankston, Seaford, Carrum Downs, Campbellfield, Meadow Heights, Skye, Derrimut, Coolaroo and Waterways. Skye, do you have any final comments on those suburbs?
That's it. So I think we'll throw it over to our listeners, but I guess as always, keen for your comments, questions, thoughts. I will start working on that list, the top suburbs for 2026 as well. So if you've got any price points you're interested in, because from our perspective, and this is kind of foreshadowing maybe some future episodes, the best price point is going to be that 1 to 1.5 over the next kind of 6 months. And so we're going to be doing a lot of buying there, both individually, which we'll touch on separately, but also for clients. So if you are someone with that kind of brief, we'd love to hear from you, because I think it's going to be one of the, the best performing markets for next year. That's a wrap for this episode of the Melbourne Property Podcast. Just a reminder that this information is general in nature and should not be considered financial advice. If you'd like to discuss your personal situation, book a discovery call with the team at Convergence Buyers Agents. Our link is in the show notes.
If you learned something from this podcast, hit subscribe and never miss your fortnightly dose of Melbourne property insights. Catch you next time, and happy house hunting.